What is up, everybody? Welcome back to the Junior Markets YouTube page. Today we have a very special video, and if you're tuning in from YouTube, make sure to check out our website, which is what I'm on right now. That's going to be a lot of the stuff that we go over, but we have a pretty cool video. So, like some of you know, I'm in the Student Managed Investment Fund at my college, where we have a $500,000 portfolio, and we manage a bunch of different stocks. We try and track the S&P 500, and so we just had our current holdings, where we are assigned a stock in our portfolio, and me and my senior analyst partner had to do an entire deep dive and analysis to see if we should continue to hold this stock, if it fits in our portfolio, all that type of stuff. So what I try and teach on this website is a lot of what my professors and leadership teach in that club. And so when you go through stock market and you look through what everything is, when you go through and you look at treasuries, bonds, especially the more info where we talk about REITs, cap rates, cryptocurrency, foreign exchange, a lot of that stuff, but especially in investing, we go over a lot of different investing strategies. Company filings are very important, knowing how the three statements link to each other. I know I have four here, but one is on the balance sheet, the statement of stockholders' equity. So knowing how everything links and looking through evaluating a company metrics, all different types of metrics for different types of companies. So we kind of combine all of this onto our reports. Now, here is my report. I was doing it on SENIOR, which is a materials company. They do plastics and they make coatings and adhesives for paints. Pretty much every sector they sell their products to. So today we're going to go over how our firm wants us to research stocks and how you can research stocks to make sure that you get all of the information you need before deciding to invest in a stock, because this is all of the information that our firm and our professors want before they spend 40 grand into a stock as well. So our report starts off with the executive summary, which we kind of go over our analysis, why we believe SENIOR. We were pitching a hold because we currently hold SENIOR. So we were kind of talking about where it fits into our portfolio, how long we've had it, the dividends, stuff like that. Just kind of a basic overview of the company. And then we go right into the business description. And now this was a page that I did, and you make all of these graphs through Excel. So this is kind of just getting a baseline for the business. They want us to understand what they do, what sectors they run in, what industries they sell to. If one revenue stream goes down, do they have others? So an example for SENIOR is they have a lot of operations in China. So if that goes down, if Trump gets elected, then they have other revenue streams to make up for that. Because as you can see in this graph right here, let me do this. As you can see in this graph right here, about 30% comes from Asia, and a majority of that is China. So heading on down, some of the things that you want to look at and understand before you go into a stock are macro and microeconomic points of view. So macro is kind of understanding the overall industry. What is in the industry right now? If it was shipping, it might be the port strikes going on right now. If it was tech, it might be data centers and where people are pumping money into research and development, stuff like that. And so when we looked at a materials company, where's my mouse? Where's my mouse? There's my mouse. So if we were looking at a materials company, we were looking at some things in the industry that pertained to our company, but were also part of the broader scope. So things like the automotive industry, and as about 50% of the engineered materials half of SENIOR's revenue comes from automotives selling to electric cars. It was very important to make sure that the CAGR, the growth of the automotive industry, was where we wanted it to be, and that this market continued to expand. And we also looked at industry booms where COVID-19, where companies were having to overstock or destock. Feel free to look and read through any of this to see what we kind of talk about. But then we would move down into micro, and this is more centered into the business. So we talked about some mergers and acquisitions, and then we talked about debt. And on our presentation, which I might make another video on how we present and how they teach us to present, we talked about a capital structure and how they plan to go about handling this debt. So first off, you want to get an overall view of the business, And then you want to get some macro and microeconomic points of view. You want to understand the industry and how this business fits into the industry. Then we move on into investment opportunity. Where does this company compete? Why are they better than their competitors? Where do they have a competitive advantage? So Celanese's competitive advantage comes a lot from their long-standing tenure, how long they've been there and how established they are. They have a lot of brand loyalty, and since they signed contracts, it's easier for companies to stay with Celanese rather than move to other companies, which would account for a lot of costs. So not only does Celanese have this, but they also utilize acquisitions, which we kind of talk about, and we mentioned a few throughout here. So looking into companies, it's important to make sure how they're growing, because an important part of the material and chemicals industry is seeing how these companies are growing and how they're keeping up with their competition, they're growing revenues. And it's important to look at these things because some of these mergers and acquisitions can help cut costs. So I have a graph right here of operating margin, and as you can see, Celanese's operating margin is well above the average, and so that was one of my big selling points on my presentation. And then as you can see as well, their research and development spiked up because they're spending a lot more money on developing new chemicals, new patents. So making sure your company has organic as well as inorganic growth is very important. And as you can see, we talked about a lot of the acquisitions, their assets ended up tripling. And when you look at assets, you also have to look at earnings per share to make sure that it's being represented for the consumer. So their earnings per share also tripled, which was another selling point for this company. Now, moving down, after investment opportunity, we wanted to go into some investment risks, what holding this stock could do for our portfolio in case something goes wrong. So Celanese is a very global company, and they have a lot of their revenue segregated across multiple regions, and those regions are at risk to wars, the Houthis in the Red Sea, all these type of things. And if you go into a company's 10K, right into the business description, they'll list risks where you can go over it, but most of the risks in the 10K are basic, obvious risks, like a risk that every business has. Like if a hurricane hits, we're gonna lose production in this factory plant. Well, duh, so would everyone else. So really where you want to find your risks is secondary websites other than the company's 10K itself or the earnings call or whatever it may be, because they tend to list very basic risks. And so we would look on Morningstar, Yahoo Finance, Statista, stuff like that. And so some other risks that they would have is new chemicals coming to market, patents, all that type of stuff. And that goes into research and development, which we mentioned up here. So going through our presentation, it would kind of tell a story. We would mention things, and then it would lead into things that we would talk about later. And so as you can see here in this graph, the capacity to container ships. So one thing that Celanese would do, since they have so much overseas, which we mention right here in this graph. I lost my mouse again. There we go. Since you see it in this graph, they have a lot of business everywhere. It's important to make sure that the shipping containers are continuing to be supplied at a rate that we like. Now, we did a SWOT analysis, which you could do a Porter's 5 or SWOT analysis. Feel free to go into detail looking up what either one of those are, but a SWOT analysis is strengths, opportunities, weaknesses, and threats, just kind of giving you an overall of the business. And then we looked into metrics. So it's very important to look at your company's metrics, and companies have industry-specific metrics. Pharmaceuticals, research and development, because they spend a lot of money on research and development, as well as sales, making sure that the pharmaceutical that they develop, the medicine, whatever it may be, is getting out to the public, and that they have patents, and that when the patents get up in 20 years, how they're making new drugs when the new generic drug is able to be released to market. So we had two metrics tables, a domestic and international, because like I said, they are very global. And so we had some of our basic ones like quick ratio, looking at current liabilities and assets, debt to equity, which debt to equity was very high because of all of the acquisitions. We had taken on a lot of debt to help fund this. Now we had paid for some of it in cash, but that's why our debt to equity was so high, and so we had to pitch that. And so we also had our PE and forward PE, which were about the same, so earnings are staying the same. We had our beta, it's about 1, so the company is not very volatile. And then we were looking at research and development as a percentage of sales. So it's nice that this number was a little bit high. And then some other things that we were looking at for the international, were some of the similar things: inventory turnover ratio, making sure we were getting our inventory out, return on assets, quick ratio, some of the other things we were looking at, and then our debt to equity, which, as you can see, is still very high. So these are some of the things that we deemed most important for this company. And so for our conclusion, we kind of talked about where Celanese fits into our portfolio and why we should continue to hold it because of all the revenue streams. So when you're looking at buying a stock, look at risks, metrics, revenue streams, where the competitive advantage comes from. What is this company going to do if something goes wrong? And something has gone wrong in the past. Celanese had something go wrong during COVID. Read the earnings, or listen to the earnings calls and the investor talks. What did they do to calm their investors' nerves to make sure that they were going to get through this? Now, we had our models as well at the end, and this is our pro forma, also known as an earnings model. So as you can see, this is forecasted. So what forecasted means is it's forecasted. I know, who would have thought? So let me fix my pin here. I don't know why it's like that. So what forecasted means is we forecasted our income statement into the future to kind of predict what was going to happen. And so as you can see, they had some crazy revenue spikes throughout the past little bit. Oh, that's too thick. Never mind. There we go. So they had some crazy revenue, and then it kind of stabled out, and then we predicted it to continue to stay high but also drop down and stabilize as they incorporated all of the assets into their company. And so when you look at it, we can see that their gross profits going up, we have their revenues going up, and so these are all of our forecasts, and we did all of the cost of goods sold and expenses that come on an income statement as a percentage of revenue. And so then we would get down to our net income at the bottom using GAAP. And as you can see, the net income is slowly going up with about $1 billion increase over the next 4 years, which was one of our main selling points because this company needs a lot of cash to be able to pay off their debt, which they did stop share buybacks and cut their dividend increase to help get some of that off. Now, we also had our DCF, which we went through, and our DCF was a little off because of how many current assets and current liabilities this company has. They just have way more, and so it really messed up the current the free cash flow that we predicted. And so this means that our DCF was way off, and it predicted a price of about $370, which wasn't right. And so what we focused more on was the dividend discount model. And now, because Celanese has a nice dividend, we use the dividends to estimate a future price. And so you use the terminal growth as well as the exit multiple method, using the payout ratio, cost of equity, all that type of stuff. But one uses the terminal growth and then one uses price to earnings. And so we were able to get to these two valuations right here, and then it came out to an average of 147, which I believe was like a 10% upside. But overall, this is how our firm wants us to research stocks and how they want us to articulate the information. They want to have all of the business description. They want to know about the business, and then they want to know about the industry. They want to know about the market, and then they want to get into where the investment opportunity is, some of the risks, and then a few other factors that come along with that. I like looking at graphs because it helps you kind of see the trends. And so feel free to go through and look at all of this. But this is kind of what our firm wants. And we ended up presenting in front of the firm, in front of about 110 professors, alumni. There was a Goldman Sachs analyst there, a couple JP Morgan guys. So it was a lot of fun. And we ended up presenting. It was a great time. But this is how our firm wants us to articulate everything. And going back to my website, if you look at investing under evaluated company filings, metrics, I kind of teach you about all of the basics to this stuff. If you have any questions about how to do it yourself, or feel free to read through the report and look through how we worded and researched everything. But all of the websites we used, other than probably Morningstar, because we get a free account with KSU. So for every 10 grand a semester we spend, we get to use Morningstar. Great deal, I know. And so that's something that we get to do. So, but all of that information is out there for free. You can find pretty much all of it on the 10K, except, like I said, I wouldn't look at risks on the 10K, because if you go through and read through the risks of any company on a 10K, it's the most basic thing you've ever heard. And so going on my website, you can just go and kind of look through all of this stuff, and I think it's pretty cool. But that is it for today's video. Thank you so much for watching. This is how we and our firm researches stocks, so feel free to go through and copy anything that we did. Thank you so much for watching, and have a good day.